Hey guys, welcome back to Sharks Academy, and it's been a while since I've posted like the post analysis and the entire thought process of the trade ideas that we took. So you can see clearly on our own Telegram channel. If you haven't followed us, please follow us, right? The link is at the bottom of the YouTube channel. So take a look at this. We took several trades here. This was pound yen followed by euro CAD. Then we had another pound yen trade and euro dollar. So these are the 4 trades that we took just a few days back, and of course just a few minutes ago. And let's run through the nearest or the upcoming trades. Okay, look at this. How do we get involved inside of this 1 minute POI at 50%, and why over here, right? Because there's so many POIs, so why did we choose this one? So let's go from the top-down analysis, right? First of all, we understand that we are bullish, and yes, we are trading near the bottom of the entire swing. So generally, you want to look for buys over here, yes. So the truth is that you can either wait for a lower time frame shift on the 15M to catch buys into this sell side move. So you understand that this is still delivering bearishly, right? This is on the 4 hours. We are still delivering bearishly for EuroCAD, and this will continue to stay bearish until prices break structure over here, right? So this is the low, the high, the low. So don't get confused. This is a minor low, right? This is the major low. And then the high would be at this level. Okay, so if you want to see prices moving towards the upside, then yes, we want to wait for prices to break this structure. Until then, we are still bearish because the current trend is bearish. Okay, so this supply as well as this supply has the opportunity for prices to take liquidity lows over here, because this is of course bearish. So we are going to be bearish here, we're going to be bearish here, and this will not change until we see this gets broken. Then now our analysis would have changed, right? We're going to wait for a break of structure here, we're going to wait for demand zones here, and we'll get involved here using the 3-step process all over again. So now, where is our 3-step process in this case? Okay, first of all, we have the break of structure here. This is our step number 1, right? We are 4 hours bearish, we have a break of structure. Step number 2, we have a 15 minutes, I think it's a high time frame S&D zone. We have a 30 minutes S&D. Okay, you can use the 1 hour as well. So now this is our step number 2, right? We have an S&D, we have a supply here that could potentially take us lower. And the last step would of course be the 3-step process, which is our step 3, right? 15 minutes big break of structure. So it came from here, high, low, high, break of structure, right? Leaving behind 2 POIs to work with. We are looking to sell here. Of course, this is a refined area, and we are looking to sell here because this is a wick, you can see, right? We are looking to sell here as well. And true enough, on the 1 minute, you can clearly see this move, right? Breakdown. So what is this, right? Yellow box. Okay, this is simply Wyckoff. Okay, we have the buying climax, automatic rally, ST, signs of weakness, UT, break structure. This is the last point of mitigation. We are going to take sells here, and this is what we did. Okay, this sell let us believe that, okay, we are going to run into this retail resistance area, turn support, and this demand over here. And true enough, you can see prices indeed tap into this demand, and now showing us signs that it wants to go higher. And this is totally valid. Okay, so you understand that we are looking at a 1 minute trade idea, and we expect this move to run into demand zones that are valid to take prices higher, because you understand over here, we have an accumulation phase, we have a breakout. This may be the pullback that we are trading, you understand? This may not be the impulsive break that we're looking for, because this has an impulsive break. This may be the retracement. So our entry may be the retracement, which would have gotten take profit as well. Okay, so I hope you understand what I'm talking about. And don't worry, we have another 3 more examples. Okay, so let's take a look at pound yen. Okay, so pound yen smash take profit. And you can currently see we had a trade idea here, or I think it was yesterday. And currently we had this one over here. So how did I get into this move? So when prices creates this trend line and support, you can see over here, I was expecting prices to make a run into this level, but from where? Okay, in our webinar, we talked about this supply zone being valid because it came from a high area. Look at this. Okay, taps into the supply, right? Prices broke structure here, leaving behind a supply that was left unmitigated. And at this point of time, this entire move was a markup into this supply to take prices lower. So this was the trade idea. So now, what is going on inside of here? Because on the high time frame, again, we have a break of structure, right? We have a low created over here. We have the high. So when prices breaks this minor low, okay, or rather you can go down to the 15 minutes and look at this, track the highs, track the lows. This is bullish price delivery. And when prices breaks this level, we are bearish. But where are we bearish from? Are we going to be bearish here? We're going to be bearish at the point of this break, right? So this entire area over here is valid for sells. So true enough, we waited for a price to come back over here. And this is where traders who are using aggressive entries, who have placed a sell limit here, stop loss above the high. But you know, as Sharks Academy, we use the 3-step process. We understand that this is the step 1, this is the step number 2, which is the S&D zone. Step number 3 is the confirmations. And over here we are using S&D flips, okay? Break of structure on the 15. Highs, lows, highs. Break of structure. This is our first POI. This is our second POI. Okay, and this move over here took us to liquidity lows. So the truth is that I could have gotten a better entry because you can see I took the entire 5-minute supply and I got involved in the open. So over here, if you have used the 50%, you will definitely have gotten a way better price than I did. And if you go down to the 1 minute, you realize that it tapped into the last supply over here. You can see this supply was left unmitigated and it taps in perfectly. Alright, over here. So let's move on. Alright, this was a 1:4.65 towards the liquidity lows. And we move on to euro dollar. So how do we get this trade idea? Let me see. Okay, so the trade idea came from here. Alright, so again, where is our 3-step process? We understand that on the 4-hour time frame we have a break over here. Okay, whether it's liquidity grab or not, we do not know just yet. But all we understand is, yes, we have a move over here. We have lows, highs, break structure, leaving behind 2 POIs for us to work with. We have the first supply over here that is valid for sells. And we have another POI over here. So I took the trade at the extreme, right? So now, first, or rather step number 1, right? We are H4 bearish at this POI over here. Step number 2, supply zone. This is the supply we're looking for. And step number 3, our lower time frame confirmations. So this is where we go to the 15 minutes and look for the shift in structure. So you can see clearly this isn't very clear, right? Because we have a high, low, low. Then where is our high now? This is the high. So where is the low? This is the low, and then this is the high. So when prices break structure here, it left behind a supply zone here. And that is all we need. We place a sell limit at this level. We stop loss above this high because this is the highest point of reaction, right? Over here, I use S&D flips. For traders who are using just a 15 MBUS, this could have been an entry as well. And I'm pretty sure that there is Wyckoff, you can see. Okay, this is where all the confluence comes into play. We have the buying climax, automatic rally, we have the ST, we have the UT, UTAP, the break of structure, pullback gets involved, smashed TP1 over here. This is your take profit area. Why? Because this is the lowest it went to before the pullback. So your first take profit is always going to be at this level, regardless of where it goes to. So let's say if prices break structure over here, pulls back, this level would be our take profit number 1. We will not wait for a move down into this level because we do not expect prices to break through, right? We do not expect prices to run the high time frame liquidity lows when it haven't break through the first target. Okay, so this is the trade idea for euro dollar.